In this video, I'm going to show you two different mean reversion strategies, one of which uses the popular indicator RSI or Relative Strength Index, and the other one uses no indicators whatsoever. We'll do a comparison looking at the results of both strategies. I've created a special code which allows me to test both strategies over almost 15 years worth of data. By the way, both of these strategies are profitable over the long run, so if you wish, you can steal them from me and trade them if you want. The reason I'm creating this video is because I noticed that currently my most popular video is a video where I demonstrate how to trade mean reversion and reversals without using indicators. And in my personal collection of trading strategies, very few of them actually use indicators at all. Mean reversion and reversal trading is obviously popular, so I'm here yet again to show you another profitable way you can trade with or without indicators. We're first going to have a look at the strategy which uses the indicator, and obviously you can see that I've got the RSI indicator down here in the lower pane. We're looking at pound-dollar forex pair on a daily chart, and I've got data from 1st of January 2008 through to the end of November 2022. For the RSI indicator, I've changed the length to a period of 2 rather than its standard setting. And we're looking at the overbought and oversold levels of 90 and 10. You can see these green horizontal lines here. I've chosen 2 just because it seems to work well in the past on the daily charts of different instruments that I've looked at, like the S&P 500. We could optimize this and probably find a better length, but for this video we're just going to stay with 2 and the recognized levels of 10 and 90. Rules of the strategy are very easy. What we're looking for is, let's start with this one here, we're looking for the indicator to close above the 90 and then we go short on the open of the next bar, you can see that here, and then we don't exit until the indicator closes below the 10 level, and then we cover the short, but then we also reverse and we buy. So it's always in the market at the 90 and the 10 levels. That's where our trades open and close. And you can see, look, shorted it here, profitable trade. We've gone long, profitable trade, short, profitable trade, long, profit, short, profit, long, and this trade hasn't closed out yet. It will close out when the RSI closes above the 90 level, and it's looking that it will probably be a profitable trade too. So the rules are dead easy, and they're easy to spot the entry and the exits on the chart. So let's have a look at the performance report. That's what the equity curve looks like over all those years. We look at the close to close, you can see that it's making new highs right up until very recently. We go long only. That's not a very good curve, is it? It's flat at best. So most of the money has been made on the short side of this pound-dollar strategy. Making 62,000. Long is actually losing, so all of the money and more has been made on the short side. Look at the total trade analysis. We've got 250 odd trades. A large average trade value at 248, that's good. I haven't included any costs in this strategy, but we don't need to because we've got such a high average trade. Costs will more than be paid for and make profit on top. So that's the reversal strategy using the RSI indicator. Now we're going to have a look at the strategy which doesn't use any indicators. And I actually use a similar version of this strategy in my own live trading too. Needless to say, I do personally prefer the performance of the strategy which doesn't use indicators. But just before we do that, if you'd like access to more strategies like these ones using a fixed set of rules, then you can download my 22-page Beat the Markets strategy guidebook. And at the moment, if you use the link down in the description, then you can get it completely free. But for those of you who want to take your trading to the next level, you might like to enroll in my popular trading course. And amongst a lot of other different important aspects of trading, I actually give away 6 more profitable trading strategies, and I give away all the rules to them. So plus, if you're a multi-charts or a TradeStation user, I actually give you the code so that you can import it or copy paste it into your software and run some testing, maybe even improve them or trade them yourself. But don't worry if you're not a multi-charts or TradeStation user, because the strategies do have very straightforward rules and you can trade them just with a regular trading account as well. Again, links for that will be down below in the description. Okay, let me show you that no indicator strategy on the chart. Same chart again, obviously, pound dollar on the daily chart or the 1440 minute chart. And the rules for this strategy are very simple. We're just looking for either 4 green candles in a row or 4 red candles in a row. So let's look at this first trade here. We've got 4 green candles, and then on the open of the next bar we short. So we sell the long position that we're in, and then we short the market. And we stay in the market until we get 4 red candles. And you can see here 1, 2, 3, 4 red candles. We cover the short position, and then we open a long position. This was a losing trade. We stay in the market until we get the 4 green candles, and we short. 4 red candles, and then we go long, and then we'll exit this long as soon as we get 4 green candles. So really straightforward. Let's have a look at the performance report. There's the equity curve, which I think you'll agree is a little bit smoother than the strategy which uses RSI. Now remember, the RSI strategy made all its money and more on the short side of the market, and this is the short side using the green and red candles, which is good. And on the long side, apart from a few of these early trades here, we are actually making money on the long side, so that's more even, and I'm happier with that. It's making $107,000, much more than the last strategy. Actually making money on the long side, you can see that. Looking at the total trade analysis, we've only got 134 trades, so it's trades less, so it will stay in trades longer. A similar percent profitable, a huge average trade at $805. So just to compare, there's the equity curve of this strategy with $107,000 on the previous strategy with RSI. That's what the equity curve looks like, and I'm making $62,000. Obviously, the RSI length of 2 and the overbought and the oversold levels of 90 and 10 might not be the best for this market and this time frame. But for this demonstration, I didn't want to start running optimizations. So which strategy do you think works the best? Do you like looking at 4 red candles, 4 green candles? Do you still prefer looking at the indicators? There is no right or wrong answer. If these are strategies which you do want to trade, remember, I haven't shown you any sort of a stop loss. I do generally recommend using stop losses, and for this type of strategy, and from experience, you're going to need quite a large stop loss, as with most mean reversion strategies. For the version of the red and green candle strategy that I personally trade, I actually use a 500 pip stop loss. It doesn't get hit very often at all, but it is there as a fail-safe in case there's a huge move against us. Well, I hope you've enjoyed the video, and I hope even more that you might have learned something. If you have, then please give the video a thumbs up and consider subscribing for more videos just like these. Thanks for staying to the end of the video, and hopefully I'll see you next time. But until then, this is Jared Goodwin, and thank you.